Hi, this is Steve Nicholson, Chief Economist at International Food Products in St. Louis, and this is Thursday, April 5th, and we're going to talk a little bit about the acreage reports from last week. We're not going to go through the numbers because the numbers are well publicized and people know them. I think just on the soybean number, the only thing to say is, wow, that's an awfully low number, and just as just sort of a statistic about it, that's the lowest acreage in soybeans we've had since 2007, 2008 crop year, so it was 5 years ago at this point. But we do want to spend just a minute today talking a little bit the implication of those numbers and just emphasize again to you all what they mean. Obviously, with the acreage number down, you have less harvested acres and therefore less production. Even if you get a trend line yield, you're going to have a production number that is not going to keep up with the demand for soybeans, both domestically and around the world. The other thing this means, of course, is a price issue. And as we saw on Friday, and we also saw on Monday, the soybean market and the products related, oil and meal, did jump significantly numbers. If you look at soybean oil, we're nearly 300 points above the low of just four trading days ago. So this has had a significant impact on price. And from my projections or my expectations of the market is probably a better way to put it. We probably are consolidating on the May futures around 56 cents on soybean oil with the upside potential around 60 cents. So you're at the bottom end of the current range. If we dip below 56, I think any of that is probably a good buying opportunity, and you have to consider very carefully whether you're not going to buy at that level, and do you really believe that the market has an opportunity to go lower? In my opinion, it doesn't at this point. You've certainly put in the expectation under the market as far as acreage. We probably should say one thing, and it has been talked about some in the marketplace, but we've had very dry weather and warm weather in the U.S. Corn Belt so far this spring, maybe a little bit too dry. And with that, you have seen corn planting already in parts of Illinois and Iowa, not very much, but some. And with that planting, those are corn acres, and the more corn acres we get, the less bean acres we're going to get. And the better spring we have, like we have now, they're going to plant corn, and so that's not necessarily conducive to an increase in bean acres, even though the price of soybeans have gone up considerably. So just as a wrap up, keep in mind the range that we're in right now is 56 to 60 on soybean oil versus the nearby, and anything at that 56 or below area is good ownership to own for the longer term for probably the rest of this year. So again, this is Steve Nicholson, International Food Products St. Louis. Thank you for listening and watching.